Think you need to max out your credit card to build a strong score? Or that checking your credit too often will ruin it? Well, you've been lied to. There's so much bad advice out there about credit, and if you believe the wrong things, it could cost you big time. But don't worry, I've got your back. Today, we're busting some of the biggest credit myths that are holding people back in 2025. Because let's be honest, credit isn't just a number. It's your ticket to financial freedom. Welcome to Concrete Advisory, where we cut through the confusion and give you real practical advice you can actually use. Let's get into it. Myth number 1. Checking your credit score hurts your credit. A lot of people still believe that just looking at their credit score can somehow damage it. But let's set the record straight. When you check your own credit score using a bank, a credit monitoring app, or a service like Experian or Credit Karma, that's called a soft inquiry, and it has zero impact on your score. What actually affects your credit is a hard inquiry, which happens when lenders pull your credit report for things like loans or credit card applications. And even that only dings your score a little unless you're applying for a ton of credit at once. So stop stressing and start checking your credit regularly, because the more you know, the better decisions you can make. Myth number 2. You should carry a balance on your credit card to build credit. This one is super common, but it's also completely wrong. Carrying a balance doesn't help your credit. It just helps the banks make more money off you with interest. If you really want to boost your credit score, the trick is to use your credit card and pay it off in full every month. That way, you are proving you can handle credit while keeping your credit utilization low, which is one of the biggest factors in your score. A good rule of thumb: try to use less than 30% of your available credit. And if you can keep it under 10%, even better. So unless you absolutely have to carry a balance, don't do it. Your wallet and your future self will be way better off. Myth number 3. Closing old credit cards will boost your score. Maybe you have an old credit card you never use, and you're thinking, I should just close it to clean up my accounts. But here's the thing. Closing an old credit card can actually hurt your score in 2 big ways. First, it shortens your credit history, and the longer your credit history, the better your score. Second, it increases your credit utilization ratio, meaning you suddenly have less available credit, which can drop your score. Unless there's a really good reason, like a high annual fee, it's usually smarter to keep that old account open. Here's the bottom line. Credit isn't some mysterious game. It's about understanding the rules and making smart moves that set you up for long-term success. The sooner you get this stuff right, the sooner you start winning with money. So let's do a quick recap. Checking your credit score does not hurt your credit. Carrying a balance on your credit card won't help. It just costs you money. And closing old credit cards can actually lower your score instead of helping it. Now that you know the truth, it's time to take action. Start checking your credit regularly, manage your credit wisely, and set yourself up for a better financial future. The more you understand, the more power you have over your money. If this video helped you, don't forget to hit that like button, drop a comment below, and of course, subscribe for more practical financial advice. This is Concrete Advisory, and I'll see you in the next one.